Hi everyone, welcome back to Be Rich. I'm back from my trip to Greece and I briefly visited Dubai. Now I'm back in Chennai. I thought I'll catch up with Shashwat and find out what's happening in the world of finance. So, what do we have today, Shashwat, to talk about?
Yeah, today I wanted to talk about the topic of de-dollarization, but not under de-dollarization. What we covered last time was, more about the geopolitical situation. But now what I wanted to look at was more of a technical aspect towards the idea of de-dollarization and why the dollar continues to remain as dominant as it is. So, technically speaking, there's this nice article on the FT, which the article title is "The Dollars Are Not Fragile." So what the case is trying to make is that dollars by design are not fragile because of this institution called the Federal Deposit Insurance Corporation. So what the Federal Deposit Insurance Corporation does is basically it says any deposit on bank deposits are insured for up to 250,000 US dollars. So what this author is arguing, saying that is the dollar is not really this note which you're looking at, but rather the deposit in banks. And when currency traders are exchanging dollars, they're exchanging deposits in one country, in any country, for a deposit in the US. So the idea here is that the dollar offers unparalleled risk-free this thing compared to most other currencies because of this FDIC institution. So no other currency, even the EU, only offers up to 100,000 euros in terms of insurance on deposits. But the US dollars offers an unparalleled $250,000 in terms of deposits, and no country offers this amount of safety to individual depositors. So this is one reason to why the author says there's a dominance of the dollar. And what do you think about that?
Well, after the recent Silicon Valley Bank debacle, that FIDC has removed that $250 limit also because out of the fear that it will cause cascading bank failures. I don't know if it's temporary or how long it will be there for, but any amount deposited in an American bank is now backed by the government. So it can be $250,000, it can be $1 million, it can be $10 million. It's secure. And you're absolutely right. There's no country in the world which can offer you this. Meaning, no matter what shenanigans the banks are doing, whatever plays they're doing, and whatever golden parachutes are offered, your money is safe with Uncle Sam.
Yeah.
And I don't think there's any country, even India, cannot give you such a guarantee. If you remove all the political, you know, angles to everything, I don't see that kind of security being offered by any country, Europe, UK, even India, anywhere you take it, like what Americans are offering. And the most important thing, which the article highlights, is the trust of the dollar. The dollar is something that is so stable that everything is priced on the dollar. Everything is traded on the dollar. It's just not the question of having a green $100 bill in your hand. It's a concept of trust. Dollar is when you talk about dollar, it's talking about trust. That when you say so many dollars, it is that many dollars. The value does not dramatically change. By the time I ship my product to you and it reaches you, with $30 is what's going to be coming to me. The value of the dollar doesn't erode so dramatically that even a shipment takes 6 months to come to me, or ship 6 months it takes for me to get me my payment cleared for some reason, it's not going to be a problem.
Yeah.
No other currency offers that. That kind of strength, no other currency has. That kind of trust, no currency has. And now with the FIDC's backing, no other currency has that backing. Meaning, if I keep all my money in US Treasury and if I'm keeping all my money in an American bank or I'm working only with dollars, it is safe. It's not going to go anywhere. And the government, American government, has done nothing. If you see its recent history from 2008 crisis, it's always being cowed down to the financial system. It's never stood up robustly against the financial system and said, "Oi, what you're doing is wrong. You shouldn't be doing this." And let a
Yeah.
couple of banks fail or curb or choke. The Chinese do it. The Russians do it. In a national crisis or for a national political reason, they choke. They put their
Yeah.
hands into the piggy bank and they start playing around with it. The Americans, the politicians play politics on all things. But as far as the dollar is concerned, they do not play politics. They play internally politics with their debt ceiling and all that is going on internally. But as far as they project to the world, they project it a united front saying their currency is stable, their currency is safe. And even if you're talking about de-dollarization, which article also talks about, it is not going to happen overnight.
Yeah.
It's not like suddenly you can switch it off and a new
Yes.
currency will suddenly come and take its place. He talks about Argentina as an example. He says if Argentina starts taking payment for soya beans in Chinese currency,
Yeah.
renminbi, it's not going to hurt American dollar in any shape or
Yeah.
form.
It's not.
Even if Russia says I will take payment in renminbi for all the oil I'm going to give China, it's not going to dent the dollar
Yeah.
because it's a global trust. It's not just some physical currency the dollar is. So that kind of trust, it cannot be replaced overnight. It has to be built. This
Yeah.
American dollar was not built overnight. After World War II, it was the only country which was not shattered by World War because it was isolated as a
Yeah.
continent. They
Yes.
had the capacity to shoulder the rest of the world and carry the rest of the world forward. So that led to them progressively, step by step, moving forward and sitting on top of a lot of global committees. Slowly, over a period of 40, 50 years, the dollar has become the dollar.
Yeah.
So I don't see any currency in the even realm of possibility that slowly can take the kind of position against. Whatever you see in the political front in the Middle East, in China, in Russia, is just saber rattling for bargaining with the Americans.
Yeah.
They have not done any major dent to the American economy or the dollar. And the
Yes.
major
And
powerhouse economies of the world, which is Europe, and that's backed by Germany and Japan and the US and UK. Let's take China and Russia out of it. We
yeah.
take the G7, so called G7 right now. They all want to still talk about dollars.
Yes.
And they control most of everything. They control liberal politics. They control everything. So even in Greece right now, a right-wing man has come back. The guy who was prime minister before has come back with something majority. Everyone thought he was going to lose because of the railway accident and the forest fire, the way it was handled, and some recent taping scam he was wiretapping scam he was involved in. They thought he was going to be out, but he's not. He's a right wing guy. He's back in power. But even he talks in unison when it comes to about economy. Is about liberal economy
Yes.
because liberal economy is the only economy which right now
Has
might be a
done.
broken system, but we don't
Yeah.
have anything better. That's what the article also goes on to say. Yeah,
Yeah.
it has problems. The dollar economy has problems, which are big problems.
But we have
But
no replacement.
yeah, we don't have a solution.
And
Solution is
one more,
not
there's an interesting point which the article touches upon, which I didn't think about, which was that US treasuries, the sheer volume in which they're printing it is a big advantage to them because now it's very accessible, so anyone can pick up everyone has access to that asset.
correct.
If you want access to the Chinese yuan, you have to do it on China's terms. Whereas the
Correct.
US can just go out and buy it on the exchange and you're done. There's no
Correct.
terms and conditions, and you don't have to sign your soul to be able to own US treasuries.
Correct. They're
That's
actually
that.
very grateful if you're buying their treasury because that gives
Yeah.
them more capacity to borrow and they're
Yes.
happy to sell it to you. And because of digitization of the global economy and accessibility through internet to all of us and the plethora of media, social media platforms which are there giving information now, people and the public are well aware the security which US Treasury is.
Yeah.
So, like you rightly said, Chinese cannot go do it. You might buy a Chinese product, you might buy a
Yes.
Chinese phone, but he ain't definitely going to buy the Chinese government bonds.
But even buying a Chinese phone, funnily enough, means that you're already signing up to their policies of spyware and information. This thing, and the problem here is that the image which is attached to China as a country is something which they aren't able to wash off per se, and they don't seem to be willing to wash off the image which
Correct.
they have made for themselves.
Correct. The same problem is there for the Americans too, in the sense that, like you rightly said, if I sign up for a Google account, Google has like access to all my information. If I sign up
Yeah.
to an Apple account, Apple has them access to all my information. But it's not
Yeah.
the American government which is having the access. It is the
Yes.
corporate America. So it is two separate things in the US, where you have the corporate and you have the governing body. Like even
Yes.
recently, as yesterday, recently, as yesterday, this guy was called an open AI. Sam guy was called in to the American Congress and he had to sit and answer some questions. They asked him very hard questions and he gave some very frank answers about where AI technology is right now, what the future could be, and the downside of AI technology. And he said, yes, we made a mistake with social media 10 years ago. We missed the boat in regulating social media, and we're suffering for it now 10 years on, where we have this huge monster, social media monster out, and is affecting all our children and our future. So we're trying to correct it. Looking back, he's
Yeah.
saying, at least with AI, let us try and bring regulation and things into place so we are better off 10
Yes.
years from now with AI being a tool, which we are able to use, then it becoming a monster. That
Right.
is what I'm saying, which is there in the US. But in China, the problem is everything is for the Chinese government. All
Yes.
Chinese corporations are for the Chinese government. So there is no separation of anything in China. It's just that on the surface level, they may say it's separate and all that. But deep down, if you're in China, if you do anything in China, it is for the government. It is
Yes.
for the leader of the Chinese Communist Party. You can't wash away from it. If you try doing it, you'll be out of the country the next day, if you're
Right.
lucky. Otherwise, you'll just disappear. And this is
Yeah.
true with China, this is true with Russia, this is true with Iran, this is true with Syria. So if you're a businessman, and we've seen this throughout history, where we talk about this famous guy, I forget that author's name, that famous storyteller author, which we read his book.
Oh, Yuval Noah Harari.
Yeah, he writes about it. He talks about the specific example where he talks about a German family who sends two of his sons, one to Amsterdam to invest money, another
Yes.
one to France, the King of France. And the
Yeah.
King of France will keep on choking, and he'll tell all his sons to shut down business in France and move to Holland because simple reason, and the Dutch at least honor their word.
Yeah.
So if you're an organization and you want to do business, end of the day is to make money. You'd rather be in a country where the laws work. The
Yes.
laws are fair at least. Even in a country like India, laws are really not fair.
Yeah.
When push comes to shove, political pressures do come in.
And
And the article
there's
highlights that very nicely.
Yeah, and almost as a footnote, he ends up mentioning, I think, something which should have been elaborated more on, which is that U.S. Treasuries don't go to fund some super amazing investment in the country or anything. It goes to only but have budget tax cuts and also stimulus checks. So the
Yeah.
question here becomes, when you have expenditure which isn't outright into infrastructure or something, how are they still able to fund this push in the amount of treasuries which they're able to print every year, year on year, consistently?
You're right. But who else is there?
Yeah,
You're absolutely right in what you're saying. But who else is there? He says that in the article too. He
yeah,
says, end of the day, you may not like the American politics. You may not like the way the federal government is spending its money. You may not like the way they're borrowing. You may not, but okay, you don't want to do business with us, fair enough. But who else can you do business with?
right,
You're left with that.
yeah,
So yeah, yeah, it's true. Yeah, we don't like a lot of things, but until and unless we are able to create something better, we don't have a choice. And of course, everyone said crypto is going to be this. They said, you know,
it's true. The problem with crypto is the fact that you can't have an FDIC. You can't have and cryptos. No one is willing to buy or sell in crypto.
that's
It's
why. Because what is the fundamental problem in crypto? The
too
problem with
volatile.
crypto is there's nobody there.
Yeah,
So who do you trust?
yeah,
Even end of the day, the dollar bill says in God we trust, but it's actually the American government, actual human beings sitting there and
yes,
printing it and giving it to you.
yeah,
They may print whatever you want on the dollar, but end of the day, there's a man standing behind there, signing it and giving it to you.
right,
Crypto, the problem is there's nobody there. And
yes,
you've seen these spectacular failures in crypto, and the investors were left holding the bill. And this happened in the American economy way back during the Depression, in the way back in the 1920s and 30s.
oh
That's
yeah,
what led to
that's what led to the creation of the lender of the last resort, the Federal Reserve.
correct. Correct. And very funnily enough, the other article which you had sent me, even the president at the time, Franklin D. Roosevelt, said this guarantee is a problem.
Yeah.
because once you give a guarantee,
Bad lending practices cannot be
stop.
disincentivized. Yeah.
Yes, it's like being a parent. Somewhere you have to be the bad parent. You have to be telling the child there is a stick. You cannot
Yes.
keep on giving carrots to your child and expect your child to behave. Somewhere
Yeah.
along the line, the child has to realize there are consequences.
Yeah.
Believe it or not, the point of capital punishment is not to kill people. It is to instill fear of the law. That the only thing you don't want to never lose is your life. So the prospect of losing a life, your life, will prevent you from doing something stupid, breaking that law.
Yeah.
So that will be a motivation. And 80 to 90% of the population follows that. Of course, the fringe of the population, ends of the curve, they do what they want.
Yes.
Majority. So that's the problem with this FIDC thing which has happened recently because of Silicon Valley Bank, where he's removed the cap.
Yeah.
So once you've removed the cap, then you pretty much nationalize banking in United States. It's become finally the government is all a government bank,
Yeah.
in a weird quasi way, run by private guys who will bet on weird things and weird concoctions.
And
But that was an
the
interesting.
idea. Sorry. Yeah. Go on.
No, that was an interesting part of that article where he
Yeah.
says the
Yeah.
biggest problem in banking sector is that he very nicely illustrates that. He says the problem in the world global financial market is banking,
Right.
and the problem within banking is when we started giving compensations in form of equity. you
Yes.
know so it's run like a company now, publicly traded company, where shareholders, the guy himself, the CEO of the bank, is vested in, he's got so many million shares. He wants
Yes.
to pump up the price, so he'll take all kinds of risks and all kinds of bets, which is not a good thing.
And you always have a get out of jail free card if things go south.
Yeah, because FIDC is standing there to give you the check. The
Yeah.
American government is ready to. So that has to change. I do agree in that article, where compensation for executives and board members and all these guys should not be in terms of equity.
Yeah.
Let him have a golf club membership, let him have country club membership, drive a Mercedes, or get him whatever money he wants, let him take. But he cannot
Yeah.
have equity. He cannot have skin in the game, because that leads to taking risks. If the guy does not have any motivation to make the bank more profitable, then he would be doing the famous Article 6, 363 equation, where
Yeah.
you pay interest to your depositors of 3%, and you charge 6% interest to borrowers from you, and then at 3 p.m. you shut down your office and you go home and sleep.
Yeah.
That's vanilla form of banking before the
Yeah.
days of all this equity trading which happened. And all the motivation which has happened in Silicon Valley is due to human error. The 2008 financial crisis was due to human error, where
Yeah.
these guys were so high on gas fumes, they were thought they could just keep making money, and they thought they just couldn't see the tip of their nose anymore,
Yeah.
and they started taking all kinds of bets,
Yeah.
getting
But
that they're
the
running a banking sector.
the interesting thing though, or the counter argument I'd pose is that, I mean, you talked about the banking sector during the 20s in America, and the one of the interesting stories then was that, I mean, the US dollar was still pegged to gold back then. So
Yeah.
banks had to have a certain amount of gold in their reserves for them to be able to, and there were checks which were done which would see
True.
their stockpile of gold. And there was an interesting
Fiscal checks.
excerpt from, yeah, and there was an interesting excerpt from John Kenneth Galbraith's book "Short History of Financial Euphoria." It's a great short read. But he talks about a story where a bank fills up only the top layer of the this thing with gold, and underneath is all rusted nails. And he puts the
Yes.
gold on top and he transports it. So the checking guy, he bribes him with some of the gold and he says, just look at the top and then let us go and let us
True.
lend as much as we want to. So, I mean, at this point, I'd say, I mean, and back then they didn't have the FDIC per se. So they were still engaging in malpractices even then. So I doubt whether removing the FDIC is a solution
No,
per
no.
se. Suitable.
FDIC cannot be removed.
Yeah.
FDIC has to be there. The guarantees have to be there. Unfortunately, that's the way it is. You know, You have to have your parents guaranteeing you as a
Yes.
child. You need to have your parents looking out for you. That has to be there. But what needs to be removed is rewarding bank managers and bank runners with equity, and incentivizing them behaving badly.
Yeah.
There is no need to take risks. At least what will happen is all banks will not. Yes, there will be bad players, like you rightly said, even back then, putting gold on the top and rusted nails at the bottom and pushing it through. But not all banks did it.
Yes.
But now what's happening is all banks are doing it because there's so much of pressure because of shareholder pressure on you as a
Yeah.
manager, as a CEO, as a board. You don't have a choice but to take these decisions. Because if
Right.
you don't take these decisions and take these risks, your shareholders will dump you and they'll move on.
Yeah.
So if
And
you
then your
stop,
compensation gets screwed then.
correct. You know, today was Elon, like he's saying Elon Musk was worth $150 billion. After 1 week, he's now only worth $100 billion. Like, what if we talk about
Yeah.
Adani? He was like so many $1 billion now he's worth. So as a bank manager, you're sitting and looking very happily at your million shares price so much. Next day, it's all gone. You feel
Yeah.
terrible. And there's pressure on you to pump it back up. If you don't
Yes.
have any shares, you can say with a clear conscience, saying, I don't want to take these risks.
Yeah.
You know,
If your
because
only
it doesn't
incentive,
matter.
yeah, if your only incentive was linked to getting your salary, then you pretty much don't want to go out of a job. And
Yeah, and always there will be bad players. That's what the article also says. Because all
yes.
these errors are human errors. There will be
Yeah.
someone greedy, someone, like your ICICI Korcha, which happened with Videocon. Some
Yeah.
backroom friendship might happen, and yes, bank like that, something might happen. But those are okay. Those are in the fringe. Majority
Yes.
of your big banks will be
Will
stable,
be
will be
fine.
sound. Yeah.
Yeah.
And you will at least avoid things like Silicon Valley Bank.
Yes.
You'll avoid some stupid decisions being taken, like what happened with Citibank and all the other banks in 2008.
Yeah.
So removing compensation through equity is a good idea. And this is even true for other companies. Certain sectors can be, like even in pharma sector and all that, maybe can be looked at as an idea. Because let's say as a CEO, you're being compensated in terms of equity.
Yeah.
And it's something, you should not be taking risks in. It's an industry where a company where you're manufacturing something where you should not take a risk. You should not be motivated with shareholder pressure. Share pricing should not be a pressure on you. Then maybe it is a good thing to not have competition in terms of equity. So you're not under the gun all the time. Say, okay, I have to make it profitable. I have to increase my margin.
Right.
I have to increase my earnings.
Pushes people
Well,
to think in the long term.
yeah, but these are problems, like he rightly said in the article. Even if you had a majority government, you can't, fix it. It's not something that can be fixed overnight. It has to
Yes.
come from us as consumers because we want the cheap wine, we want the free stuff, we
Yeah.
want, we are the ones who are motivating and propagating this behavior.
Yes.
If we do not participate in this behavior, if we as a public stand back from it and say, no, we don't need to do this is crazy, there won't be any market for it.
Problem solved.
Yeah, but we as collectively as a species only tend to do these things only when we reach the precipice of collapse.
Right.
Even in World War II, after Germany went to one country, next country, UK kept on ringing the alarm bell, but everybody, France and everybody was saying, "Hey, hang on, he just wants one small piece. It's
Yeah.
okay." Finally,
Yeah.
when he came banging on your door, you guys woke up and said, "Okay, this is not."
Yeah.
It became a threat to your own survival. Same way, most human decisions come only when we are pushed to that point where our survival comes into question, where we take these decisions which are prudent.
Right.
If we take these decisions earlier, we could avoid them. I hope our finance sectors improve.
Yeah.
But it's an interesting read. But that's
Yeah.
what he finally does say. There's no change in the dollar. Don't worry about this. Everyone clamoring, and it's just media frenzy which is there saying de-dollarization, dollar is going away, and all that. It's not happening anytime soon.
Yeah. And
Anyway,
so
that was
that's
an interesting article which you brought and shared with us, Shashwat, today. So I really appreciate it. It was really fun reading it with you and sharing with our audience. I hope you guys enjoyed this conversation me and Shashwat had about banking and de-dollarization part 2. And I look forward to talking to you some more tomorrow, Shashwat. I hope we
Yeah,
have something interesting like this to talk about. Thank
definitely.
you.
Yeah. Thank you.
If you like this video, as always, please do share it with your friends and do subscribe and turn on the bell notification. So each time we come out with some new content, you'll be notified so you can watch it as we put it out. Thank you again for joining us today on Be Rich.
We had a meeting in Singapore. I was very pleased with the results. Indians received me with great love and affection, and I enjoyed my time in Singapore. The meeting was a big success, and I could meet a people from various walks of life. I miss going to Kuala Lumpur, which is very close to Singapore, just 4 hours drive, and I have been asked to come there. So my team decided on the 11th of June, Sunday, we would do an event in Kuala Lumpur. If you would like to meet me in Kuala Lumpur, kindly send a message at the WhatsApp number given below and or drop a mail to the mail ID given below. My team would contact you at earliest. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.